Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be my April market update. Well, since my last video, we had a black swan event, and the United States decided to pick a fight in the Middle East and start a war with Iran. And so that has caused everything to get a little chaotic. It has caused markets to go into turmoil. The cost of gasoline has skyrocketed. Markets are now predicting that the Fed's not going to cut rates this year when there were several baked into the system. And all of that volatility has led to slightly higher mortgage rates as well. The good news is that the spread between mortgage rates and the 10-year Treasury is still relatively small, and rates went from the high fives just back into the mid sixes. So we're basically back where we were all of last year. So thankfully the spreads are favorable. If they weren't, and we had spreads similar to 23 or 24, interest rates would be well north of 7% and maybe even closer to 8%. So the fact that we're still in the mid sixes is very much a good thing. Everything was super hunky-dory and markets were headed in a super positive direction. We were seeing light at the end of the tunnel. In fact, we had a jobs report like the week after we bombed Iran that showed job losses, which would have surely led to Fed rate cuts. And I think that we would have had mortgage rates at like 5.85, which would have been very much a welcome relief. And we would continue to see a lot more real estate transactions taking place because of those lower mortgage rates. Instead, what we're seeing is, yes, there are a lot more closings taking place right now, but that is on the heels of interest rates being in the high sixes. So a lot of those transactions are just now closing because, believe it or not, we've only been in this altercation for about 4 weeks or a month. And so the market, the housing market, really hasn't had time to react to it. So remember, the housing market is extremely slow to react to volatility in the markets. It's very much not like the stock market. So imagine the housing market as with the theme of war being a giant aircraft carrier. It's very slow to turn and react to what's happening on a daily basis. So the housing market really hasn't shown signs yet of any sort of correction or pullback. We're still closing about 6 or 7% more transactions in the greater Phoenix area today than we were last year. Now, with everything that's going on, I do think that we will see a pullback in the market because those interest rates have gone up. Anytime that we see an increase in interest rates, we always see a pullback in buyer demand. I do not think that we're going to see buyer demand fall off a cliff because, again, we're just regressing to where we were for most of 2025. And believe it or not, 2025 was a relatively normal year for housing because there wasn't a lot of volatility in the markets, right? So if this altercation or excursion, as the administration wants to call it, continues and escalates, well, then things could be very different, and we could see higher mortgage rates, and then we could see a really big pullback in demand. That could also lead to recessions and all kinds of other things that we won't get into here because we don't know what the future necessarily is going to look like. If we see de-escalation, then I think that we'll see a kind of delayed spring market in the Phoenix housing area, where we're going to see a little bit of a pause in activity right now. If the war stops, then we're going to see a return back to what we were seeing because mortgage rates will come down, people will start to feel good, the cost of gasoline will decrease, and we'll just see an increase in that demand. So I've been comparing it to like pinching a hose, right? Water still comes out just at a slower rate. So imagine if the war ends, that hose becomes unpinched, you'll start to see all that pent-up demand return to the housing market. So all this is really predicated on how long this lasts. So what are mortgage rates going to do? Well, I think that as long as the federal government continues to buy mortgage-backed securities, it's going to put a ceiling on interest rates. I do not think the Fed is going to hike rates or decrease rates while this is going on. I think they're just going to remain on pause. I do think that they understand that inflation will go up, but that is mostly transitory because it's due to this isolated event and is not more of a systemic issue. The only way at which they start to do anything thing is if we start to see unemployment go up and we actually go into a recession. So if we see more and more jobs being lost, that usually leads to looser monetary policy from the Fed. And so if we start to see unemployment go up, then the Fed may end up getting back into a rate cutting scenario. I don't predict that happening quite yet, but if this continues and the cost of goods start getting more expensive, that is something that could come down, and we are starting to see a little bit more speculation in markets and from pundits talking about a recession coming because of this war that we're in. So what can sellers expect? Well, sellers can expect really a repeat of what we saw in 2025 and just, longer days on market. So right now it's still taking, 70 to 90 days to sell a single family home. So that is not going to change. We were predicting shorter days on market because there was more demand in the housing market. Now undo that, right? So you're going to see less demand, longer days on market. If you're getting offers, definitely be willing to negotiate. Do not be one of those sellers that digs in. This is not the market to do that. I am seeing a lot of buyers be like, well, if they're not willing to negotiate, I'm just going to go find another house. So sellers need to be willing to have those conversations, assist buyers with covering their closing costs. Absolutely be willing to do repairs or offering some sort of credit in lieu of repairs. You are not in the power position right now, so don't act like it. Be willing to do those things in order to sell your property, or you're just going to end up not selling. That's really the market that we're in. So you have to be very reasonable. Be thankful if you get an offer. Be open to actually committed and to doing repairs or offering a credit in lieu of repairs. If you own a townhome or condo and you get an offer, just take it. It is so hard to sell a townhome or condo right now, partly because of pricing, but it's because those guys are also competing with super cheap apartments. There's a lot of apartment complexes, higher end apartment complexes that are much cheaper than what the mortgage payment on a townhome or condo looks like. So if you are selling one of those and you get an offer, be willing to, take it, because who knows when the next one's going to come along. And if they're asking you for repairs, just do them, because you don't want to lose that buyer, because it's going to take a long time to find another one. So buyers right now have choices. Listings have increased and there's less buyer demand out there. And so you have options. And so if you do come across one of those sellers that isn't willing to negotiate or have a conversation, be willing to move on. I always say that the one that wins negotiations is the one that walks away. And right now, buyers have a lot of the power in the marketplace. Also expect to be paying slightly higher interest rates, right? The interest rates from a month ago were in the 5s. Well, now we're into the mid 6s. So what that typically means is that you're going to be paying a slightly higher payment for the same house, or you're going to have to buy a less expensive home, or just find a seller that is willing to negotiate. But really the difference in your monthly payment from something in the high 5s to the mid 6s is relatively negligible. I don't know what your budget is, so I don't want to say too much in that, but it's not that drastic of a difference, and to where if you can make it work, you still might be able to afford that same home. And we do know that once this ends, that I think markets will start to return. They want to. We have seen it. The administration has come out and spoke about how they're trying to end this and get out of the situation. And whenever they do, the markets respond extremely favorably. So again, as long as this doesn't last for a long time, I think we will see a return. So if you are a buyer who has been looking, I think continue to look and just recognize that you probably have less competition now, so that you can negotiate for more. Again, as a reminder, the market really wants to get back to normal, and we saw this. My video last month said that if we fast forward 5 years from now and we look back, 2025 was the start of a normal housing market, and 2026 was emulating that. This is a black swan event, and those events are typically short in duration. Remember COVID, right? Like, that was a black swan event, and it came and it ended, and the housing market, took a dip and then it skyrocketed. So we don't know what is going to happen on the heels of this. Just know that it is temporary. Markets always find a way. So even if this does linger, these other oil-producing countries are going to figure out ways to get oil out of the country. The markets are going to figure it out, and we will get into some sort of normalcy again. So the markets are always seeking that balance, and I think that the markets now are craving that, and we see that anytime any rhetoric comes out of the administration about getting out of this. And so once we are out of it, we will return back to normal. I hope that is soon. For my sake and for yours and for everybody else's in the world. And so hopefully this altercation or excursion ends soon. And in the meantime, if you were in the housing market looking to buy, I would still do so. If you were planning on listing in the springtime, I would still do so. I wouldn't really change my plans. Again, we're only in the mid sixes. It hasn't been that crazy of a shift, and we're just kind of reverting back to what we've already seen and what we've already been through over the last couple of years in terms of where buyer demand versus supply has been. If you have any questions, leave them in the comments below. Don't forget to give a like and subscribe, and I will see you next month.